Kia ora, I'm David Chastain with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news still driven out of the United States. High and persistent inflation is the greatest near-term risk to the American economy and financial system, the US Federal Reserve said in its semi-annual financial stability review. It also warned of rising instability in the trading of American government debt. An unexpected future shock could amplify existing vulnerabilities, and shadow banks, that's leveraged financial firms other than regulated banks, are the main risks that they see. Also over the weekend, US non-farm payrolls rose more than the conservative forecasts, up 261,000 in the headline result and well above the expected 200,000. But as regular watchers will recall, we prefer to watch the actual numbers, and those rose by 1.17 million in October from September, and taking their paid workforce to a massive 154 million, and easily the largest ever. That is 1 million more than the seasonally adjusted numbers report. The pay for 1 million extra people is likely to be highly stimulating and power American consumption for some time to come. And that will also be adding to inflationary pressures and bolstering demand. They have a paid workforce 3.4% larger than this time last year. And it's now a chicken or egg issue going forward. Will the new expanded employment drive economic expansion, or will the stuttering economic expansion make the higher employment levels unsustainable? Seemingly endless warnings of the US economy is running out of steam have so far proven unfounded. And north of the border, Canada also reported strong and strengthening jobs. They expected a 10,000 rise in paid jobs, but actually reported 108,000 new jobs. And adding to the positive vibe, Japan's services sector is well on the mend, with it expanding at a faster rate in October. And in Australia, their residential rental market is in a crisis, with vacancy rates at 1% or below in most urban areas. And the Australian Central Bank expects a couple of tough years for Australians, with real wages continuing to fall as inflation persists and unemployment starts to rise. These forecasts are part of their latest monetary policy statement from the Reserve Bank of Australia. The US Treasury 10-year yield starts today at 4.16% and unchanged from Saturday. And the price of gold will open today at $1,683 an ounce. That's up $8 from this time Saturday. And oil price start today, little change from this time on Saturday, at just on $91.50 a barrel in the US, while the international Brent price is just on $98 a barrel. And the Kiwi dollar will open today at 59.3 US cents, and a quarter cent higher than this time Saturday. For a week, it's up 1.25 cents and a strongish revaluation. Against the Australian dollar, we've stayed firm at 91.7 Australian cents, a near 4-month high. And against the euro, we're up slightly to 59.6 euro cents. That all means our trade weight index starts today at 69.7 and our highest since mid-September. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chastain. That was 90 at 9, brought to you by interest.co.nz.